Ladies and gentlemen, this is an emergency upload. China is seeing unprecedented capital outflows and bank runs happening right now. And guess what? They're desperately trying to hide it and cover it up. Because when I investigated how bad things really are, it's even worse than I thought it was going to be. And with China being the second biggest economy in the world, there's a saying, when China sneezes, the rest of the world catches a cold. So you need to buckle up. You need to be informed what's happening in China right now, because they definitely don't want you to be aware of what is happening, what the consequences are going to be for the US economy, for the Australian economy, because what happens in China hugely affects Australia as well as the US, and you're going to want to know how you can protect yourself against the incoming crisis. So everyone, again, this is not me being alarmist, this is not me exaggerating. Things have never been worse than in China right now. So everyone, without further ado, you know what time it is. Let's get straight into the news, the facts, and the data. Well, look at this everyone. China's central banks pumps near historic level of cash into the financial system. And why are they doing this? Because we are at a historic, like it's saying here in this title, a historic economic crisis in China, but they desperately trying to cover it up from the rest of the world. So the PBOC, that's a People Bank of China. That's the central bank of China, like the Federal Reserve in the US, like the RBA in Australia. They had net injection via reverse repo, and is the second highest in history. But people, this is only just the beginning. When I delved deep in this report, when I looked at the charts of what's really happening under the hood of the financial system, once I pulled back the curtain, it was far worse than even I imagined. So let's dive deeper, everyone. The People's Bank of China injected a net 958 billion yuan, that's 131 billion US in cash via 7-day reverse repurchase agreements in daily open market operations. This is the second highest on record in data compiled by Bloomberg going back to 2004. So that's right, they injected in just a matter of days $131 billion into this reverse repo market operation. This is like what the Federal Reserve does with the repo markets in the US to provide liquidity for the financial system, to provide liquidity for the banks, but they're desperately running out of money. The operation is aimed at offsetting the impact of the expiration of the medium-term lending, peak tax season, and cash demand before the Lunar New Year holidays, and to keep banking system liquidity ample, the central bank said in a statement. The sizable liquidity support will come as a relief for Chinese lenders after a cash crunch early this week pushed 7-day interbank funding rates to the highest in more than a year. So again, people, this is not clickbait like many people accuse me of. This is actually happening right now. People are pulling their money out of the banks at record pace. Banks are desperately trying to get capital and is sending interest rates for this liquidity for these banks skyrocketing. The PBOC increasing determination to defend the under pressure yuan has led to fears it might be restrained in providing sufficient liquidity support for the economy. AKA, this is checkmate for the PBOC, the People's Bank of China, because on one hand, they're trying to provide liquidity to the banks, but on the other hand, they can't keep pumping money into the system because the yuan is crashing. And people, what have I been warning about for years now? I've been saying all these governments trying to kick the can down the road, eventually the road will end. And what are we starting to see? How is this road actually going to end? Well, it's ending with fiat currencies collapsing, because they can't just print money like they did before, because if they do, their currency is going to crash. But if they don't print money, the banking system's going to implode, the markets are going to implode. I'll show you what's happening with the Chinese stock market very, very soon. They're actually officially in a bear market with the stocks crashing over 20%. And also, if they don't do this, the economy is going to tank. So again, people, this is absolutely checkmate for China's economy and banking system. Now go ahead and bring this chart here. This is PBOC raises cash injections to ease funding crunch. We can see here it has just hit a record high and people are starting to panic. Now the 7-day repo rate, if you're wondering, what does this mean? It's an interbank borrowing cost benchmark, and it fell as much as 70 basis points following the People's Bank of China operation. Before powering the decline to trade under 2.2%, the rate closed Tuesday at 2.3%, the highest since October 2023. Liquidity conditions remain tight for non-financial institutions, with signs of demand exceeding supply, according to traders. So again, to put it very, very simple, this is the interbank borrowing cost. It's a benchmark for these banks to lend money to each other, but we're seeing non-financial institutions have record demand for cash because they're going bust, but they cannot support this record demand. And like I was talking about earlier, this is leading to a currency crisis in China. But we also got another report. I've got multiple reports in this video. Don't click away. Don't go anywhere. You're definitely going to want to watch this video to the end. We've got this next report, and look at this. So China's record capital account outflows pile pressure on the yuan. The yuan has slid almost 3% in the past 3 months amid dollar gains, and management of capital account may become more stringent. So that's right, people. We're starting to see the early collapse of fiat currencies, and this could usher in China's central bank digital currency. So as we dive deep in this report, this is what I found. As if the yuan wasn't already under pressure from weak Chinese economy, a surging dollar, and the prospect of high US tariffs, the currency faces an additional downdraft, a flood of money looking to invest overseas. So that's right, we're seeing very, very wealthy families in China. They're taking their money out of China in record amounts. They're investing in overseas assets because they know China's economy is about to go down. So China's capital account, which tracks flows of capital in and out of the country, saw a record outflow last year as investors looked for better returns abroad. And that's unprecedented, an extension of the imbalances that is likely to raise fears of serious capital drains, undercutting Beijing's ability to manage the yuan and increasing the chance of regulatory crackdown. So that's exactly right, people. Like I was saying, people are getting out of China while they still can, because as we see more and more capital start to leave the country, we know the CCP is going to crack down. They're going to stop people from fleeing the country. They're going to stop their wealthy billionaires from pulling their cash out, and they're going to have a massive crackdown before things get even worse. Because I'll go ahead and pull up this chart here, we can see China's capital accounts deficits has been growing. We can see the trend here, and it has just hit a new record. So make no mistake, people, things are much worse than we originally thought. The challenge for the People's Bank of China is that weak growth is making it hard to attract growth-sensitive portfolio inflows, and risks around foreign business viability in China is making multinational corporations reluctant to add to, or in some cases leave or sell investments there. That's exactly right. We're seeing Apple, they're leaving China. They're not investing in China as much as they were before. We're seeing iPhone sales continue to plummet in China. And a lot of people are seeing with how controlling China is getting with the CCP, and they're seeing China now as uninvestable. And they're heading for the pills, people, because look at this. China's local banks set a net 1.33 trillion yuan, that's 182 billion of funds overseas on behalf of their clients for investments last year. This is a record based on Bloomberg calculations, and that total takes into account foreign investment into the country, as well as the purchase of overseas securities by local investors. So again, this is more proof. Smart money, the big institutions, the wealthy families, they're sending their money overseas, they're getting out while they still can. Meanwhile, the support offered by the nation's multi-year trade surplus, which climbed to a record 992 billion last year, has been gradually diminishing. So yes, China has had record surplus, but that's all about to change. And exporters have preferred to hold on to their dollar earnings due to high yield premium on US assets over Chinese assets. Now, the central bank in recent weeks has delivered multiple warnings against behaviors it considers to be market disruptive. aka they know their currency is plummeting, they know their markets are plummeting, and they're desperately trying to stop the panic. And it sought to retain a tight grip on the currency through its daily reference rate for onshore trading. The authority has also acted to drain liquidity in offshore markets by pledging a record amount of bill issuance in Hong Kong. So that's right, everyone, their central bank know things are getting very, very bad, and they're desperately trying to gain control of the markets again. So okay, we know things are bad with the banks. We know insiders are pulling out records amounts of capital, but look what just happened with the Chinese stock market. So Chinese stock market enters bear market as geopolitical risk mount. The MSCI China gauge extends drop from October 7th high to 20%, and investors are bracing for worse geopolitical tensions. So that's exactly right, everyone. If you thought that the downtrend in China stocks were over, well, with Trump coming into office with more tariffs, with people pulling out their money, this stock market downturn is only about to get worse. So stocks of have started 2025 on a weak note as investors break for higher tariffs that may prolong China's economic slowdown. The US blacklisted Tencent Holdings Ltd and contemporary Amperex Technology Co. this week for alleged links to the Chinese military, while the Biden administration is mulling another round of curbs on the export of artificial intelligence chips. And the moves have rekindled fears that tensions will only worsen under the incoming President Trump. Well, they will get much, much worse, everyone, and we will see more economic slowdown, like it said in this article here, and I think we'll see more companies be blacklisted, like what we saw with TikTok. Now I'll go ahead and pull this chart up here. This is the MSCI China Index, and we can see here how it has officially entered a bear market. And it looks like the technicals are showing us here that if this continues to break, we will see more downward pressure. But I went a bit deep into this report, and this is what I found. A stunning rally in Chinese shares late last year lost steam as investors' hope of a more forceful fiscal stimulus didn't bear fruit. While authorities have continued to roll out fresh support measures, they've been piecemeal in nature and far short of market expectations. And like I was saying before, people, the reason they're falling short of market expectations is because they've kicked the can down the end of the road's ended, and they can't do unprecedented stimulus without their currency absolutely plummeting. Pessimism about an economy mired in a housing crisis, $18 trillion to be exact, has been wiped out of wealth with the housing market downturn, and deflationary pressures has continued. China's consumer inflation weakened further towards zero in December, decelerating for a fourth straight month in a setback for the government's bid to drive up demand. So that's exactly right. While we're seeing inflation across the world, we're seeing a huge economic depression in China. They're saying they've got economic growth of 5%. I don't believe that at all. It's very, very convenient that they set a growth target of 5%. And they said, guess what, guys? We hit our target to the T. We've hit exactly 5% GDP growth over the past 5 years. But when you look at the fundamentals, when you look at all the money leaving, their stock market imploding, their housing market imploding, companies pulling out of China in droves, we know this is all lies. So in their latest efforts, authorities unveiled plans to subsidize more consumer products and boost funding for industrial equipment upgrades. The central bank also reiterated a pledge to lower interest rates and a reserve requirement ratio for banks at an appropriate time to promote growth. But there's a lack of positive catalyst for the market given a likely lull in major policy announcements until China's so-called two-session annual legislative meeting in March. So that's right, people. Even after all these promises, they know the emperor has no clothes and they cannot stop this crisis, because this just happened. So Chinese investments in the US have plummeted since Trump's first term, and that trend is unlikely to reverse. So Chinese companies won't likely set up investments in the US under the incoming Trump administration, analysts said. So Chinese investment deals in the US have slowed drastically since Trump's first term, according to the latest American Enterprise Institute data. Because I looked up the data and what I saw was absolutely shocking, everyone. So China's investment deals in the US have slowed drastically, according to the latest American Enterprise Institute data. Just $860 million flowed into the US in the first 6 months of 2024, following a $1.66 billion in 2023. That's down sharply from, look at this, $46 billion in 2017 when Trump began his first term. So this is absolutely insane, everyone. It's gone from an investment of $46 billion to $860 million. This shows that people in China are running out of cash and they do not have the money to invest in America right now. And with the tensions between the two countries hitting record highs, this is only going to get worse. So everyone, I know what you're thinking, well, okay, what does all this mean in simple terms? Well, what this means is China's economy is crashing. Their stock market's crashing, they got no liquidity for their banks, and they're going to suffer a huge financial crisis. Once the world really finds out how bad it really is, like what happened with Evergrande in 2021, well, we will start to see the dominoes fall. So what I'm doing, not financial advice, but I'm diversifying into gold, silver, and Bitcoin, because if we do see a market melt up in the markets, Bitcoin, in my opinion, will outperform the stock market. But if we do continue to see currencies fall, like what we're seeing with the Australian dollar, gold and silver is actually up about 40% over the past 12 months in Australia dollar terms compared with the dollar, because we're going to see more fiat currencies begin to fail. So if you're worried about your currency failing, if you're living in a country that doesn't have US dollars or even in the US, in US dollars, gold is up around 30% over the past 12 months. It's a great hedge against the oncoming economic calamities. But everyone, what do you think about all of this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.